Welcome to this video from Super Profit Club. I am Sumit Gupta. I am a swing trading coach, author and trader, and I've been trading in the stock market for more than 15 years. Today in this video lesson, I am going to talk about a very important subject on which stock market trading is based basically. And if you can identify this and if you can learn this particular concept, it will go a long way in improving your stock trading, right? So this is the concept of cycles. Okay, now what I've been trading in stock market for more than 15 years, and I've been a swing trader for more than 11 years now. And what I've learned in this time that I've been in the market, that there are cycles in the play. Okay, and if you can learn when these cycles are playing, when these cycles are in motion, you can also understand when that cycle is going to end. And once those cycles end, so what you can do is when a cycle is beginning, you can get in to the market or share or stock, whatever, or commodity or forex currency, whatever, you can use it for anything. And when the cycle is going to come to an end, you can exit. Okay, and it can give you lots and lots and lots of profits if you understand this concept. So there are always cycles happening. Okay, and let me give you a few examples from the general life about the cycles. Right? And these cycles keep happening; they keep repeating. For example, if you look at a year is a cycle of 365 days. Okay, you can also put it as a cycle of 12 months. Okay, you can also put it as a cycle of 52 weeks. Okay, you can also put it in it as a cycle of in a number of hours, number of seconds, or number of minutes, right? That cycle is going to complete. So what happens is what do we mean by cycles? Cycles is that once it gets over, again the same thing will get repeated. Okay, 99% of the times. In fact, they say 100%. I'm just keeping 1% for certain slight variations that happen because of the change that is happening in the earth. Okay, so these cycles keep happening, which means if you are looking at a year. So it starts from January and it goes till December. And we know after January, February will come, after February, March will come. And that is how it will go until December, right? And then again, what will happen is if you look at it in weeks, so first 1 week will come, then the second week will come, then this third week will come. So that's a bigger cycle. Year could be divided into 52 cycles of a week and 12 cycles of a month, right? That is how it can happen. Right. Now within cycles, the bigger cycles, there are smaller cycles which I just talked about. Right. So when you look at a week, it's also a cycle of 7 days, and after 7 days the same cycle will repeat. So it will be after Sunday, it will be Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, and then again Sunday will come, and that cycle will keep repeating. Right. So it's daily cycle within the weekly cycle. Within a day also there is a 24-hour cycle that's happening, right? And it goes the same way. If you look at it in terms of day and night, that's also cycle. After day, night will come. After night, day will come, and that's a cycle which is going on. Now you can also look at the cycles as seasons, right? If there are 4 seasons in a year, those will be the 4 seasons that will come in. So it will be spring, summer, autumn, and then winter. Again, same thing. After winter, it will be again spring, then summer, then winter, and autumn, and then winter, and that will keep repeating over and over again. So the cycles keep happening. Those are the examples, right? Now let me put it in terms of a more practical thing in the schools, right? In the schools, what happens is it starts from April, right, goes until March, and then again a new academic session will start, again a new cycle will start, right? This is how it goes. Similarly, if you are talking about tax years, same thing. It starts from April, goes until March, and another, that's a cycle. Okay, so this is how you have to look at that these are cycles happening. Now, how it is relevant to the stock trading? So each stock, each share goes through a cycle, and there are cycles happening within cycles, as I was talking about, right? There are cycles happening within cycles because so there could be a daily cycle in a share. Okay, so you could look at a daily chart. Okay, there could be a weekly cycle in a chart, so you can look at a weekly chart, right? And as I said, within a week there are 5 trading days, so that those cycles are happening. Similarly, there will be, if you're looking at a monthly chart, or you're looking at a quarterly chart, that is how it changes. So you have to just identify those cycles which are repeating. Okay, they may not be exact. They may not be exact. Sometimes, these cycles will be happening in particular days in various shares, right? Each share will have. So sometimes it will be number of days cycle. Okay, sometimes it will be a price cycle. A share may be making ranges, majority of times it may be trading in the cycles of, let's say, 15 rupees, for example, okay, or 50 rupees, or it could be 200 rupees. Okay, depends. Okay, that cycle may be repeating again and again. So you will see, okay, now this cycle is starting. This share was at 100 rupees. It went up to 115, stopped there, came down, and then again, it went down, let's say, to 110, and then again a cycle of 15 is repeated, and it goes up to 125. Right? So that's what happens. Let me give you an example on Nifty. In Nifty, one of the cycles that repeats again and again and again, 130 is a very, very, very important number on Nifty. Okay. Now, what do I mean by that? So it is basically 130 keeps repeating again and again. So it could be 130 days, it could be 130 weeks, it could be 130 months, and you look at those cycles, right? Something happens. So 130 days cycles are very, very common. So our 52 days cycle on 52 is a number again in Nifty which keeps repeating. There's a 26 number which keeps repeating on Nifty. Right? So these are all cycles which are going in. Now, if you go to 130, what is 130? 130 is 5 cycles of 26. Right? Interesting, intriguing. Yes, that raises a lot of curiosity. This is what happens in shares. So when you look at a share good enough time and you identify those cycles, you will know, yes, this new cycle is going to start now, and this is when a new cycle is going to end. Right? So when that cycle ends, you can say, okay, at the beginning of the cycle, I will enter the trade, and when the cycle is coming to an end, I will exit the trade. Now, if you want to learn about advanced, exit and risk management strategies, or how to trade in between those, two things, which is when the cycle is starting and when is the cycle ending, just attend my webinar. You can click on click on the link given below. Like, share, subscribe to my channel, and keep coming back for a new video when I'll be detailing it out in much detail. That's what I will talk about. But for now, you can look at shares, price swings as cycles. So when a cycle starts, get in. When the cycle is coming to an end, it will be exit. So you'll have to do some work. Obviously, you'll have to do some work when you'll have to get in and get out. You'll have to look at enough data of that share, a particular share that you might pick up, or it could be a currency, or it could be a commodity, or it could be futures, or it applies to almost everything. You have to just identify the cycle in that share. If you just understand this concept and apply to your swing trading or your stock trading, I can tell you, it will give you a lot of rewards. And this effort that you'll put in, or the time that you'll invest in understanding those cycles or identifying those cycles on any stock or commodity or currency, that will pay you rewards which will be unlimited. I can tell you. Okay. Wish you all the best, and we'll meet you soon in the next video.